Hey everyone, in this video I'm going to present my argument for why Chinese AI company Baidu is a ridiculously undervalued AI stock that investors can buy for the long term. I'll look at both its recent quarterly performance and the investments it's making in artificial intelligence, and I'll look at its longer term revenue and profit and cash flow expansion, and then complete with the valuation, which I will argue is relatively cheap for a company with these types of prospects. So let's get started first with the latest quarterly results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Baidu saying that their AI technology stack continued to propel the growth of their AI cloud revenue during the quarter. As a new era of generative AI unfolds in China, foundation models like Ernie will serve as the underlying infrastructure, infusing various facets of people's lives. So, Baidu has its own large language models. They call it Ernie, and they've been investing in this category for some time, and it's achieving success already. Looking at total revenue in the latest quarter, year over year, it increased by 1%, with operating income rising 10% as the company kept costs under control and was able to leverage 1% revenue growth into 10% operating profit growth. Longer term, Baidu has done an excellent job in growing revenue up to 19.03 billion in the most recent trailing 12-month period, up from around 6 billion in 2015. Even though in recent quarters the growth rate has slowed down, the company has found a way to work through slowdowns in the past, as you see here, various drawdowns where the company has worked through and found a way to re-accelerate growth longer term. And given its investments in artificial intelligence, driverless car technology, which I'll talk about a little bit later, I think it would be reasonable to assume that Baidu will return to growth over the coming quarters and years. So Baidu expanded the Ernie family of large language models by launching several lightweight large language models in Q1, making Ernie increasingly affordable. Now, you'll realize that some of these large language models, and there have been several that have been coming out in recent quarters following the phenomenal success of OpenAI's ChatGPT, they require significant computing power, and every search query costs the company funds to execute on that search query, which requires computing power that they have to pay for. So some models are becoming more focused and offering lower price performance. One such example is a company that I follow, an education company that I follow in the US, Chegg. They're focusing on a large language model strictly relating to education. And so they feel that operating that model will be less costly and will give it an advantage over ChatGPT, which is all encompassing and more expensive to operate. So it remains to be seen how the industry shakes out and whether the development of these niche products, large language models, will become more effective, or the more powerful, all encompassing models will be more sought after. For now, Baidu is investing in both categories, serving its clients whatever they may desire. Now, the company has also invested in intelligent driving or driverless car technology. Baidu's autonomous ride hailing service provided 826,000 rides in the first quarter of 2024. That was up 25% year over year. And you may have read the headlines where Tesla will partner with Baidu in order to develop its driverless technology in China, while Tesla is making headlines all over with its investments and its hopes to develop driverless car technology. Baidu's already out on the roads, providing 826,000 rides in the first quarter of 2024. They're already out there, right? While some of these other companies are only still investing in and trying to develop the technology. Baidu's already ahead of the game here. So if this is a technology that you're interested in, or if this is one reason why you're excited about Tesla stock, you've got Baidu here already implementing this technology, trading at a fraction of the valuation of Tesla shares. So if this is something you're interested in with Tesla stock, then you should really be interested in Baidu stock for that reason. Now, Baidu has done an excellent job in rebounding off of its lows in operating profit margin. You saw in the latest quarter 10% increase in operating income. And after bottoming out in late 2019 in operating profit margin around 4%, it's rebounded that all the way up to 16.23% in the latest trailing 12-month period. I wouldn't be surprised if this continues moving upward, as we saw the latest quarter strong improvement in operating profitability. Similar story for its cash flow from operations to sales after bottoming out in early to mid 2022. It's recovered nicely, almost back to the highs in 2020 at 27.21%. And most importantly, one of my favorite things about Baidu stock is that it's trading at a relatively cheap valuation, a forward price to earnings of in the single digits, trading at a forward PE of 9.5. Now, this is similar to one of its rivals, Chinese company Alibaba stock, and others that are trading at cheap valuations because of the geopolitical risks associated with investing in Chinese stock. The government in that region is not as friendly to business as in other parts of the world, as you've seen evidence of crackdowns from the government on big business. But I feel that's more than reflected in its valuation here. As I mentioned, if you just look at the driverless car segment, it's already on the roads, 800 some odd thousand rides delivered, and you're getting this stock at a forward PE of 9.5, right? Tesla's trading at a forward PE of, multiple times this number. And then if you compare other parts of the business, it's comparably trading at a fraction of the valuation of US based businesses that are in the same line of business, generating similar revenue growth and profit margins. But because of the geopolitical risk, you're getting Baidu at such a lower valuation. Now, I do agree that the geopolitical risk needs to be accounted for, and you need to pay a discount vis-a-vis if it's the same stock, the same business, or similar business, similar profitability, similar revenue, all else being equal, but one is US based and one is China based. The China based business, you've got to account for that geopolitical risk and pay a lower valuation. But this much lower, I think, is a bargain. I think you're getting a good risk versus return here. And I think Baidu is a solid opportunity for long-term investors. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.